The key event of the previous trading week was the conclusion of the trade deal between the EU and the UK. Last week, the US dollar had finally closed the session in positive territory, following a fall to a 2.5-year low in the US dollar index, which measures its value against a basket of 6 major currencies. Traders preferred to take profit on buy deals ahead of the Christmas holidays. This definitely contributed to the dollar's rise. At the same time, the prospects of the US economic recovery raise worries among investors. A slower than expected pace of the vaccination program and the uncertainty around the additional stimulus package added to the market pessimism. Republicans blocked an attempt by Democrats to approve direct payment checks of $2,000 instead of the $600 that was previously agreed. Earlier, President Donald Trump threatened to oppose a new coronavirus relief package unless the direct payout is increased to $2,000. It's still not clear whether Trump will approve the new bill this time. After a 2-month rally, the euro ended last week with a decline, or rather with a downward correction. This week and at the beginning of the next year, the single European currency is likely to resume its uptrend. However, traders did not react to the positive news about an agreement between London and Brussels. The pound-dollar pair managed to hold at current levels, despite a rise in the US dollar. The British pound settled at 1.3534 at the end of the weekly session, while on Thursday it reached its highest level since May. The historic Brexit deal includes 0 quotas and 0 tariffs, 5.5-year transitional period on fish quotas, and ensures fair competition with the UK, according to the EU standards. The UK Parliament is set to vote on the deal on December 30. Among all assets, Bitcoin surprised traders the most. The #1 digital currency continues to set new records. On Sunday, the price of Bitcoin hit the level of $27,796 per token, having gained 13% over the week. The cryptocurrency remains in high demand as a hedge against inflation and other risks. Meanwhile, in commodity markets, investors are concerned about the continuing rise in new coronavirus, which is threat to fuel demand. However, oil prices were holding in the area above $51 per barrel. Oil was supported by the fact that crude supply from Saudi Arabia, the world's largest oil exporter, fell by almost a quarter in October from a year earlier. At the same time, gold returned to the level of $1,880 per troy ounce, amid a weaker US dollar and hopes for a fiscal stimulus in the US. In addition, fears around a new coronavirus strain have increased the safe haven appeal of the precious metal. You've watched the combined review of forex and commodity markets on InstaTV with me, Anna Kasatkina. Subscribe to our channel to always keep track of all the latest events on financial markets. See you back soon.